and welcome to today's show. As usual, there's a lot to get through. We'll be talking rock and roll, we'll be talking Primark, vaping, condoms, friends with benefits, and our new series on how to get started investing. So, James, what's rocked your world this week?
Hey, Ian, one that's definitely rocking out is Gear for Music. The online musical instruments retailer delivered yet another upgrade. It's benefiting from self-help and the demise of some rivals. But I guess the big consumer story really was Associated British Foods confirming those plans to spin off Primark. It's been rumoured
Oh,
to or pushed
That's
to
been
do
a
that
long
for
time
many
coming,
years.
isn't it, James?
Yeah, absolutely. After years of
finally.
speculation. Yeah, but the shares actually went down on the day, which was more to do, I think, with an H1 earnings miss, but also some commentary around whether now is a good time for Primark to stand, go on its own, given pressures on the consumer and inflation, all that sort of stuff.
James,
Yeah, yeah.
do you know if Primark as a standalone business is likely to go into the FTSE 250 or perhaps even the 100?
Yeah, I think they're both going to be FTSE 100
Right.
businesses. So separate business. George Weston will lead the food business, and Owen Tongi will steer Primark. So yeah, a very
Right.
big story indeed. Some other stories that caught my eye: the vapes, batteries, and drink supplier Surpreme that raised guidance. We had a bit of a disappointing update from Reckitt with Q1 sales down, and also disappointing with Shoe Zone. So a bit of a punishing profit warning that's taken its market cap to just above 20 million. So there might be some speculation it could do an Allbirds, and stick AI in its name.
Shoe Zone AI. I like
Shoe
it.
Zone AI, yeah. We've got a story actually on the website on Allbirds and other meme stocks. So do check that one out. Steve, what's been grabbing you this week?
Yeah, I mean, one of the big stories, of course, has been the transition of the CEO Apple. Tim Cook is finally going to step down from that CEO role, and it's interesting timing. He's going to be around until pretty much the end of the year in this transition period as he hands over to John Ternus. And he's going to remain as executive chairman, but it sounds like he's going to take a more of a kind of a top level kind of a political almost role, talking to regulators and stuff like that. So who is John Ternus? Well, I mean, this is a guy that's basically cut his teeth in engineering and product development. So it begs the question about whether or not we might see more money, more capex put into product development down the line, and how that would play out. So I think the way investors can see this is Steve Jobs, years ago, the real kind of ideas man. Tim Cook was always seen as a very sort of safe pair of hands running the operation on a day-to-day basis. Now John Ternus comes in, and we'll see whether or not he's likely to really try and do things a bit more excitingly than Tim Cook, and what the impact might be for cash flow, dividends, and returns.
Ian, what's been on your radar?
Well, James, I mentioned at the intro, Friends of Benefits, put a note out on Personal Group, which is a workplace pensions and benefits provider. I think this is a cracking story, and the growth potential for this business is pretty big. It's undervalued, and I think there's there is income appeal as well, because it's paying about 7.5% dividend yield. So we put a note out on that. I think that's quite interesting. And then unfortunately, things might have calmed down in the Middle East, but we're starting to get more warnings coming through and identifying the Middle East as one of the problems. And it's smaller companies to start with, because smaller companies always feel the pain before bigger companies do.
Yeah.
Same when things are going well, they always, rather like little ships and big ships. Little ships catch the wind in the sails, they start to move quite quickly, and when the wind drops, they stop quite quickly. And that's what's happening. So a firm called Coral Products, it's a tiddler, makes plastic packaging for food and plastic products for other people. So customers are starting to delay orders. Existing customers, new leads are also on hold. MPAC, which makes packaging machinery, interestingly, they did a bit of a good win. They came out with very good results for FY25, but then there was a clear drop in orders, and the firm said, Goodwin, orders haven't been cancelled, but it's just difficult to tell when they're going to come in for the second half. Again, market wasn't very happy with that. And I guess the last one, Crest Nicholson, house builders, they partly blame the Middle East for lowering guidance. But to be fair, most of the warning was down to the fact that we said it before, houses aren't selling, so they're scaling
Yeah.
back their completions target. And interestingly, land sales. And they say people in the land market are not willing to pay the market price for things. I think you can take that as other house builders that they were looking to sell plots to aren't selling. So
I wonder if there's an impact here about new rules coming in for private landlords, and that may be reshaping how property investors actually react, whether or not giving tenants rights for long-term ongoing contract and so on. So I wonder if that filters through into house building prices and so on.
It could be, Steve, but as I say, we've been looking at this market for quite a long time. I thought things might be turning up, but that's a bit of a warning from. And I did see somewhere somebody talking. They did actually also say, Crest Nicholson, that they were in discussions with their lenders to extend their covenants on the debt. And I've seen somewhere else somebody talking about Vistry and a dash for cash to keep that business going. So that's what we don't need that.
Something that occurs to me is the irony with coral products, because coral obviously is one of the most impacted organisms in our oceans, and of course what does it do? It makes plastic products, which is one of the biggest causes for coral systemic destruction.
I mean, I'd never come across the company before, but as usual, scanning the RNS, it's very easy to overlook these things because it's kind of sub 10 million quid. But what the company said, I thought was really interesting, and we will see more of this. There are going to be challenges for companies coming up. James, what else have we got for the rest of the week?
Well, we've got a big day for Nick Train tomorrow, so a couple of his stocks are reporting. Finsbury Growth and Income Trust underperformed the market in the first quarter. Well, we've got LSEG and Relps out tomorrow, so he really needs a good reaction to both companies. We've also got Sainsbury's.
They're quite big, aren't they, those, James, in his portfolio?
They are. So LSEG is the number one holding. Relps is, I think, number 5 at about 10% of assets. So yeah, we'll keep an eye on those.
Isn't
Nick Train
a bit persona non grata these days?
Yeah, well, he's been underperforming for I think it's about 5 years now, isn't he? It's been a prolonged old period. So yeah,
absolutely.
He's definitely feeling the heat.
And isn't there there's a potential change at the top at the LSEs there, and just whether or not the LSE can regenerate the growth that their data business kind of promises. I don't know whether that's likely or not, but that's what the investors will be looking at, certainly.
Oh, you heard it here. You heard it here.
Something else that's worth watching out for, of course, is Tesla, and that they're reporting this evening after the bell, so around 9 o'clock BST. I mean, it's amazing if you think back. All of us been in the market for a long time, but 2 years ago, 2 and a bit years ago, I mean, Tesla was the dominant force in earnings season, a bit like Nvidia is today. And now it just so is not. And the big reason, of course, is there's lots of fluff, lots of bluster from Elon Musk, but not an awful lot of gravitas and data and cash. So interesting things to watch out for will be CapEx. Is blowing at least 20 billion quid. It's going to be on various AI projects and so on, but none of those estimates factor in is Terafab idea. Now Terafab is going to be this gargantuan data center he's got planned. It's going to cost hundreds of billions of dollars to build it, so it's going to be built in a modular form over years, but none of the CapEx plans factor that in. So seeing what he says about CapEx will be a factor. The other thing is things like Optimus. Again, I've said this before, it looks great, brilliant for YouTube clips, but how much will they cost? Who's going to buy them? And how much do they cost to make? And we still don't know answers to those questions, and we're probably not going to get answers to those questions this evening. So the market is likely to focus on what has been another pretty dismal volume quarter in terms of electric vehicles. So look out for margins to feel the pressure from competition, etc.
Yeah, absolutely, Steve. Absolutely. And I must say, before we go, we've got to big up your Start Investing Now series, which is on the website. Tell people a little bit about that.
Yeah, I mean, we are in this market to help all investors, and that means new ones as well. And so what we've started is what will be a 10-part series. We've got the first 3 parts out. It's really designed around, if you've never invested in the stock market in your life, start here, and we'll walk you through the steps A, B, C, and will turn you into someone a bit more informed about markets, to someone much more confident about making decisions, to someone who actually will pull the trigger and spend some money. And there's 3 points I think it's worth making. Firstly, don't worry about what's going on in the news in the Middle East. There's never a bad time to start stock market investing. You can't time the markets, so start today is the key question. The second thing is, everyone seems to think that you need to be super wealthy to invest in stock markets. Well, look at the three of us. We're not super wealthy. We invest in stock markets, and everyone can. Your average platform will last for about £100 deposit and maybe £25 or so on a monthly direct debit. We're not talking about a huge spend here to get yourself invested. And the final factor is markets will go up, markets will go down. You're playing a long game. Don't worry about what the stock market is doing today. Don't worry about what the stock market does tomorrow. You're playing a game for 10, 15, 20, even 40 years. Who's to say? Depends on how old you are and what your time horizon is. So come to the website, have a read of that series, and please let us know what you think. You can drop us a line at editorial@sharesify.com as usual. That's going to be roughly a wrap for us then. So thanks guys for informative little chat, and we'll see you again probably on Friday. Take care, everyone.
Cheers.
Yeah.